Thanks for joining us today on Market Call. I'm Morella Fernandez. Bruce Campbell with us on the show. He's president and portfolio manager at StoneCastle Investment Management. He'll take your questions today on Canadian stocks. Here's how to reach us. 1-855-326-6266 if you want to dial in. You can send an email as well. Market Call at bnnbloomberg.ca. Bruce, good to see you.
Yeah, thanks for having me on, Marilla.
So the TSX continues to push higher, another record close yesterday. Where are you seeing strength more recently?
I mean, we've seen strength, if you look out during the year, the materials, you really can't argue too much with that as well. Financials have been fairly strong, and those have been really, two of the dominant sectors for sure in Canada. And then if we look into the U.S., technology has been a very strong sector down in the U.S., and we're starting to see some rotation in the U.S. so that we're now starting to see that healthcare sector, which didn't really perform very well at the start of the year, starting to perform into the back half of the year here.
You have something called an early warning indicator. What does it indicate, and what's the reading been at lately?
Yeah, it's been positive here coming out of the, everything that happened with the tariffs in April. And what it's looking at is we look at sort of longer term momentum, and it will often give us a deterioration signal ahead of what we see with actually prices. So quite often we'll see that indicator deteriorating even as the markets tend to go higher. And right now we're not seeing any deterioration in that at all, even with what we saw in November when markets started to pull back. That indicators remained positive the whole time.
Okay, so it remained positive, so the long-term outlook was steady for the indicator?
That's right, yeah. So that's our early warning. That's kind of the longest term indicator, and then we also break it down to short, intermediate, and long term. And we saw the short term turn negative across a number of different indices in November. It's since repaired itself. The intermediate and the long term stayed positive the whole time. So what that indicates to us is that that's just kind of that standard run-of-the-mill correction that you can expect to see every kind of 3 or 4 months, which can be up to kind of 5 to 7%. And that's exactly what we saw. And things have recovered, and we're heading higher into year end.
All right. So what's your best guess as to what 2026 will look like for investors?
Yeah, that's tough for sure. What we do is we look at the indicators that we have right now, and they're telling us that everything is positive. When we look at some of the economic data and some of the economic rate of change data, it looks for sure that we have visibility into kind of the first 6 months of the year, and they look strong. And clearly, with the move that the Federal Reserve down in the U.S. has made, continuing to lower interest rates, and now integrating some QE and some activity with their balance sheet in there, that should also be positive.
Okay, and what about here in Canada? We know we have a budget that's focused on infrastructure push. Do you think that'll be positive for the economy, positive for investors?
Those certainly have helped, and they'll continue to help. What we really need to see is a control on inflation. Right now, the consumer continues to struggle. Anyone you talk to, certainly affordability of anything from housing to fast food is kind of off the charts right now. So we need to see that come in line and get incomes catching up to the inflation that we've seen over the last 5 years.
All right, we'll take a quick break, Bruce. We'll be back with the first phone calls and emailed questions. Bruce Campbell, StoneCastle Investment Management. Again, he's taking your questions today on Canadian stocks. Here's how to reach us. We're back in a moment. Welcome back to Market Call. We have Bruce Campbell with us to take your questions. The first question is in an email from Kevin. He says, do you think now's a good time to start a position on Abaxx Technologies? They do software tools, are based out of Toronto. We'll pull up the price chart in just a moment. Bruce, is this a company you know well?
It is. Actually, I used it the last time I was on Market Call as a top pick. So it's one that we know well, we own, and we really like. If you look at what they're doing, they've actually gone through the process of starting a brand new commodity exchange and settlement clearinghouse, and they've done that specifically for contracts that don't exist right now. So interestingly enough, liquid natural gas LNG contracts have never been traded on a standardized commodity exchange until now. And so they started that. They're also starting, some wind power contracts. They're starting some different gold contracts. Anytime that you start something from new, it's obviously have to ramp up, and they're starting to see real strong adoption, both in the average daily volume of the contracts that have been traded, but also how many new clients they have coming onto their platform who then have the ability to trade. Behind that, they also have what's really interesting as a technology that will help with settlement. So right now, when contracts for commodities are settled, it takes quite a number of days for the buyer and the seller to identify, to make sure that that person has the ability to execute on that contract and then have the money transfer through the banking system. Their technology will allow that to happen almost instantaneously. And that's going to be something that in the future will really revolutionize that side of the business. Recently, the stocks pulled back. There hasn't really been any news on why it pulled back. The companies continue to have good news. The only thing that I can kind of see and maybe pontificate on is the fact that you saw a large large shareholder just drop their position down a little bit. They still own a big position in the stock, but they were just trimming for weight, is what I would suspect. It's a fund here in Canada, and if you kind of look at the ownership, you can figure out who it is.
Okay, and the average share price has been $19 for the year, but it got up to $56.89 at one point, down to about $44.50 today. So that was the question. Good time to pick up. If it's pulled back, they could do that. All right, let's go to Lydia. She's in Nanaimo, BC, and has a question. Hi, Lydia.
Hi, good morning, Marilla and Bruce. Really love the show. Could you please give me your thoughts on Tenaz Energy and their latest acquisition, GEMS?
Okay.
Thank you.
Thank you for the question. Tenaz Energy, so oil and gas, sort of sustainable acquisition and development. Let's talk about, first of all, a little bit more about what they do, please, Bruce.
Yeah, so this is part of the former management team that ran Vermilion Energy. So Tony Marino and his team moved over to Tenaz. I think it was 2021, and at that point in time had this vision of what they wanted to do was to build up another international energy company. And they went out and made a small acquisition in Alberta, kind of got that on the book, started to operate, and then said, look, we're going out there looking for a bigger opportunity that exists. And the market just kind of sat and waited. And if you look at the stock chart, it just went, kind of sideways. And then all of a sudden, bang, they announced this huge acquisition, which was in the Dutch North Sea. And it was buying assets from a conglomerate of larger producers who really had orphaned these assets. They weren't big enough to really make a difference on their balance sheet, and they weren't putting any money into it. And so Tony and his team came in, they bought it. The most interesting thing is how they managed to finance it. And the fact that they announced the deal, if I'm getting my dates right, in early 2024, and the deal didn't close until May of 2025. So there was a period there of several months where they actually technically owned the assets, but they didn't have to pay for them, and they used the cash flow from the operation to pay for it. So by time they actually closed on the assets, they basically didn't owe anything, and they owned these assets. They then went and raised some money in a convertible debenture. They've done the next deal, which is another piece in the North Sea as well. It's another, kind of acquisition from a major that was just orphaned assets. And now what you're going to see them do is they're going to be going in and really working over those assets because they haven't had any capital put into them for a number of years. And so they'll be able to enhance the recovery, and they'll be able to enhance the production. There's probably some opportunities there for potential drilling. And then you have to know that Tony's plan is to continue to grow this larger than where it is, double or triple the size it is now. So he's out there scouting the world, looking for more opportunities. He now has a proven track record of how he can do it, and he can help out these majors, and he's got the street cred to show, hey, I can do this. So it'll be one of those stocks that probably, just kind of moves along and then takes big jumps up and moves along. If you look at the stock chart, that's exactly what's happened. We own a position in it right now, and we have for quite a while. There's certainly times when you kind of look at it and go, oh man, it seems like nothing's happening. And then all of a sudden, out of nowhere, that news comes in and it goes higher.
Okay, so definitely one to watch. Lydia is Tenaz Energy. Let's go to Renata on the line in Oakville, Ontario. Hi, Renata.
Hi, good afternoon, you two. I'd like your opinion on Telus. What the is happening to that stock? I lost about $5 since I bought it about 4 months ago. I bought it mainly for the 9% dividend, but now, of course, I'm in a big red number. Would you let me know if you think I should hold on to it and where it might go, or do you think that I should hang on to it? Thank you very much indeed for your opinion, and I'll hang up and wait for it. Thank you very much.
Thank you for the question. Yeah, a lot of questions about the Telus dividend, Bruce, as you know, and about a way forward for telecoms, which have been struggling, generally speaking. What is your take on Telus?
Yeah, I mean, it certainly has struggled from a price performance standpoint. And then we just recently had this news out about their dividend program and what they're going to be doing with the dividend. So, Renata, if you're buying this for the dividend, you should probably feel slightly to more comfortable with the fact that the dividend now is going to be sustainable, because what they've said they're going to do is they're going to not be increasing the dividend the way they have in the past. So they're going to get back to the place where they earn their dividend, which is really what you want and really why the stock is where it's at, because, you know, the market's taken a look and investors have said, we don't like the fact that, you know, their business isn't really growing tremendously, and yet they keep increasing their dividend, and at the same time they're not earning it. And so you feel a lot more secure at this point in time. Our take on this is it's not one that we would own, because we like to see that confirmation from price momentum. But if you're owning it for the dividend, what you want to watch is just make sure that ratio of what they're earning versus their dividend continues to come in line. So at some point they'll actually cross below the dividend and they'll be earning more than the dividend, and that's where the stock price will start to move. It'll probably move in anticipation of that happening. What you probably see right now is there's going to be a bit of rotation around the stock. I mean, it saw a blip up on the day that this was announced, and since then it's, you know, kind of just been consolidating, and that's just shareholder turnover, as, you know, people who look at that as an opportunity get in, and people who, you know, are disappointed by the news get out.
Okay, Renata, I hope that's good information for you to put to use. We're going to take a quick break. We have Bruce Campbell of StoneCastle Investment Management taking your questions today on Canadian stocks. We're back with your phone calls and your emails in just a moment. Welcome back. We are going to Trevor on the line in Sierra Vista with a question today for Bruce. Hi, Trevor.
Well, hello. And my question, Mr. Campbell, is on RB Global, which used to be called Ritchie Brothers Auctioneers. So they do heavy equipment, agriculture, and most recently, consumer vehicle auctions. How is that acquisition in 2023 panning out? I noticed their gross margin went down, but the operating margin stayed steady. Can they increase that? Thank you.
Okay, thank you for the question. Clearly, he knows the company pretty well. RB Global, sort of an auction house for commercial vehicles and other commercial assets. Is there growth for them moving forward?
I mean, he sounds like he knows the company probably better than I do at this point in time. We've watched this company over the years. We haven't really owned it over the years, and I mean, it's done phenomenally well. It does tend to be very cyclical because of the fact that, you know, they tend to, you know, do well, kind of counter cyclical to what the economy is doing. So typically when the economy is weak, you know, they're doing strong because they're, you know, selling and auctioning off equipment. And then as the economy turns, they start to accelerate, do a little bit better. And then as, you know, there's just this demand for equipment and no one's selling, they, you know, tend to see their numbers decline. So as long as you're able to ride those kind of ups and downs, it's a nice counter cyclical to what, historically has happened with the economy. And you certainly, since the IPO, I think around 20 years ago, you can't really argue too much with, what the stock price has done. It's probably given you, a 10 or 12% compounded return. We look at it, as one that is difficult because of that cyclicality, and we've never really stepped into it. But if you're able to either stomach that volatility or trade it, then you can do quite well. And they have done acquisitions in the past where when they've always been successful at integrating those acquisitions. Sometimes those things take a little bit longer than what you would expect or what you'd like to see, but they've been very good at integrating those acquisitions in the past.
Okay, let's move on then to Carl, who's got a question. He's in Flin Flon, Manitoba. Hi, Carl.
Hello. Bruce, calling about Rocket Doctor, please.
Okay, Rocket Doctor looks like an AI health service. Essentially, you can sort of connect and get doctor information online. Is this a company you know very well at all?
It is actually one that I know fairly well, and it's quite interesting because if you go back to kind of COVID era, everyone was talking about telehealth and the ability to do telehealth, and a lot of those stocks like Teladocs had this big run up. Well, these guys are a little bit different, but similar in that fact that they almost run like a Shopify model for doctors. So it allows them to do the same thing, whereas Teladoc had their own doctors. This allows the doctors to come in and specifically take clients, and you can actually see the same client over if you want, whereas if you were to go on the Teladocs platform, you never know who you're going to get for a doctor. So it allows their doctors to specialize and to deal with patients that only have ailments that they want to deal with and allow them to provide a lot better care. On top of this, they have their own global library of medicine, which took them, if I understand correctly, around 8 years to develop. And what that does is it's really a closed system. So if you look at an LLM now, it's taking information from all over. They've built their own global medicine so that it has all of kind of the standard ailment symptoms, and it helps the doctors diagnose exactly what the problem would be. There's a standard exam on a doctor's qualifying examination where I think there's 12 different rooms where there's people that have different ailments, and the doctors have to identify what that is. And their AI, the Rocket Doctor AI, was successful and actually outperformed a lot of the medical students in doing this. So right now, they're mostly in Canada, but they're just putting their push on into the U.S. They've signed on a lot of the larger healthcare systems down in the U.S., and so you're going to start to see their revenue ramp up. As that revenue ramps up, they'll get to the place where they're EBITDA positive.
So, sorry, is it a subscription service?
It's not a subscription service for you. It would be for the doctor, and that they are going to pay Rocket Doctor to be on their platform, and then the healthcare services actually pay to have you seen. So it would be like your medical provider. You would sign on through Rocket Doctor. You would see a doctor, and then the doctor gets paid by the health insurance provider.
Interesting. Okay, let's get to another caller then. Dwayne's on the line in Kelowna, BC. Hi, Dwayne.
Good morning. How are you today?
Good, thank you.
Great. Today, I got a question about Boyd Group. I've had it for 20-some years, and it's about 20% of my portfolio. It's done really well, but I know over the last 3 to 5 years, it's pretty much stayed level. The dividend is 0.27%, which I don't really understand that much. I'm wondering if I should sell some of it, and thinking about buying like a U.S. stock and put it into the U.S. side of my TFSA that might pay a U.S. dividend in U.S. stock.
Okay, thank you for the question. Boyd Group does collision repair, essentially. They had a pretty steep drop in August. I'm not sure, Bruce, if there was any outstanding reason you see for that, and they're at 221.05 today.
Yeah, I mean, if you've had it for that length of time, you've done extremely well on it. I mean, it's been one of the kind of better compounders in Canada, and they've really done that via acquisitions. So they've gone out and just made small acquisitions and then turned those into bigger, growing, organic as they advertise, and then put all the synergies in of being able to have a bigger operation and share costs and all those things. Of late, there's been a number of different factors that have caused it to kind of go sideways. I would suspect that over time it certainly continues its trend higher, but whether or not it sort of bops back and forth over the next little while could be more of a challenge. It's not one that we own right now. We rank our universe, and it kind of sits in about the middle of the pack right now. So when we're looking for companies, we like to see them at the higher end where they're actually seeing that revenue acceleration. For a number of years, Boyd was in there, but it's not right now.
Okay, we will have to leave it there for Dwayne. We're going to take a quick break. We'll take a look at Bruce's past picks when we come back. Stay tuned. Welcome back to Market Call. Time to go through past picks from Bruce. July 9th, 2025 is when he chose these three stocks. We're going to start with Kraken Robotics, PNG on the TSX at $3.41 back in July, and now to $6.16, so 81% return and 81% total return as well. Bruce, they do underwater defense initiatives. Is this a growing field? I know defense is a big topic now around the world. Is underwater defense something that countries are interested in?
Yeah, it seems like it's the next frontier. I mean, we've had a lot happening in, space, both, aircraft and then, kind of satellite and that type of space. But underwater is still a huge opportunity for defense because there's, so much of the world that's covered by ocean. And yet it's, becoming more difficult to build these different vehicles that can go underwater. And so Kraken has technology both from a sensor and sonar perspective, but also where their real strong point is they have a battery technology that's able to withstand the compression of being underwater. And their big client is Anduril, which is the company out of the U.S. that's building these autonomous submarine-ish type drones. And that's a really big area and an area that you're going to see a lot of growth in the next, probably decade. Just as you've seen drones in the air, you're going to see the same thing underwater.
Okay, so that was Kraken Robotics for July 2025. Let's get to your next pick. Zedcor, ZDC on the TSX, 429 at the time you recommended it, up to 582 now, 36% upside for return and total return. I was having a look at their line chart. They sort of did have a bit of a spike. It's come back down a little bit. They do security, but essentially through these taller structures which keep an eye on things. Is this a growing security model?
It is. It's actually quite an accelerated growing security model. So what you're seeing is that, originally they were just doing, say, construction sites to monitor construction sites when, people weren't there. And what they found is there's a whole new vertical in some of these big box stores. And the fact that, some of these big box stores now are putting these systems outside and it's dropping their theft down significantly because people know that, if they walk in, grab something and walk out, no one from the staff is going to try to come after them, but now they have to deal with being on a security system that's outside. The company's done a really good job with integrating AI, as many companies have these days, and so they have monitoring of all these towers from a centralized location. And what they can do is they can actually communicate with that tower. They can also dispatch when they see something that is notified on the AI that would then have an operator look at it and send out instructions. And they just continue to grow. They started in Canada. They're now in the U.S. They're doing manufacturing in the U.S. and they just keep expanding geographically to further out from their manufacturing facility.
Interesting. Okay, let's get to your third past pick then, which is MDA Space. MDA on the TSX company, most Canadian investors will have at least heard of. They have benefited more recently from some contracts with Ottawa. They were $39.12 when you recommended it, but down to $25.55 today, so a loss there. They lost a contract in the U.S., and that seems to have hit this company pretty hard. Is it a stock you're still holding on to?
We aren't. We like it and we continue to watch it. But when they lost that Equistar contract, which really had nothing to do with them, that was just a spectrum sale that ended up happening. So it was kind of bad luck on their part. For their part. And when that happened, it actually broke some technical levels. And so we sold it and we're stopped out of it. That being said, we really like the business. We think that, in the next 10 years, that business is going to be significantly bigger than where it is. If you've ever listened to the CEO speak, one of the things he talks about is the price of entry into space continues to drop. And by doing that, that expands the market immensely. And so they've had some bad luck this year. They've had a couple of contracts that they've lost from circumstances that were really outside of their control, but they're going to continue to operate and execute over the next decade and do phenomenally well. So we don't own it right now, but we watch it very closely because we'd like to get back into it.
Okay, we're going to keep it there for this block. We'll be back with more phone calls for Bruce Campbell of StoneCastle Investment Management. He's taking your questions on Canadian stocks. Back in a moment. Welcome back. Let's go to Michael on the line in Vancouver. He has a question today for Bruce Campbell. Hi, Michael.
Hi there. Thanks for taking my call. My question is on Royal Bank Canada. I've actually sued Royal Bank, ironically, in the Supreme Court of British Columbia. We settled for non-disclosure, but they did get caught emptying a senior citizen's bank account, Royal Bank Canada, to someone that wasn't the account holder. So I'm thinking digital ID might work rather than the handheld, but they have to answer for it. And is Royal Bank Canada a good investment? Thank you.
Okay, sorry, I didn't quite get some of his remarks, but there seem to be questions about digital IDs. Bruce, Royal Bank has been a good stock for a long time. A lot of Canadians own it. A lot of institutions, I think, own it as well. What do you think about the future of Royal Bank?
Yeah, I'm glad you had difficulty trying to understand all the comments because I did as well. Yeah, I mean, if you were a really passive investor and you wanted to be worry-free as much as you possibly could owning equities, this would probably be the equity that you wanted to own, right? I mean, you could probably have a portfolio of Canadian banks and Berkshire Hathaway for the last 35 years. You would have got a nice dividend. You would have got great capital appreciation. They tend to go in kind of fits and starts. Right now, the capital market side of the banks have been doing phenomenally well, including Royal Bank. And what we haven't really seen that hasn't been, super strong has been the consumer side or the mortgage side. And if we started to see a ramp up in that, if we could get to a place where, rates were lower and we started to see more mortgage originations and more housing, which is, the big challenge that everyone's trying to solve, then you would actually see the next leg up of this. In the meantime, they have a fantastic global brand. And, they were dominant in Canada, being the largest company in Canada. And so from a stability and safety standpoint, you don't have to worry too much about it. And if you're just looking at a long-term hold, it's a great investment. And yeah, it's part of, tons of portfolios. There's probably not too many big institutional portfolios that don't own Royal Bank. We don't really focus too much on the banks per se, because we're trying to add value to our unit holders beyond the banks, because a lot of them own those individually. But it's certainly one that we like and have a lot of respect for.
Okay, Bruce, thank you for that answer. Well, let's go on to another Michael in Winnipeg with a question. Hi, Michael.
Hello. Good morning, Mr. Campbell. Can you give me some granularity on a price target of Avanti Helium of $3.50 to $4.25, of which I got off your webpage, if indeed that is your position? Okay, I'll hang up and listen to your response.
Okay, thank you for the question. Avanti Helium today down about almost 4%, 3.85%. What is your price target for Avanti? Is it a stock you still hold?
It's not, and we actually don't produce price targets or research. We have, everything we do is internally, and we did own Avanti in the past, but yeah, we've never produced a price target on Avanti. In the past, I've talked about, when they execute, if they could execute on their helium project and get that all tied in, what that could mean from a cash flow perspective. And I've talked about it a fair number of times on Market Call. It's taken a lot longer for them to actually get to the place where they got the contracts in place for the helium, and then also to get the production. They're not quite at that place yet, but they're going to be in 2026. So they're going to get some of their production online, and that'll allow them to start generating cash flow. Once they get that cash flow going, then it allows them to kind of ramp up the machine again, and they'll be able to do more drilling. And then they'll be able to sell more of that helium production, and then they're going to be able to expand, and they'll keep going. So the first step is really watching for that production of their helium and the sale, and then watching the numbers start to ramp up so that they get that cash flow. So then they go back to drilling, and then go back to producing and drive things higher over time.
Okay, let's move on then to another caller. Jim is on the line. He's in Peace River, Alberta, with a question. Hi, Jim.
Good morning. It's January, TFSA season there, add $7,000. There's a couple that I'm looking at. One of them I'm really interested in, and I love because of the monthly dividend, is Whitecap Resources. Would that be a good add to my TFSA? Thank you very much.
Okay,
Bye.
Thank you for the question. Whitecap, of course, buying Varen this past year. It's up 18% on the year at $11.64. Whitecap, is it one you're interested in, Bruce?
We don't own it right now, but we certainly like it and have a lot of respect for it. And I mean, yes, it probably would be a great acquisition for your TSFA. It has a nice dividend. They've done a great job of having a diversified portfolio, and also, the kind of talk of the energy sector in the last sort of 5 or 6 years now has been a focus on capital. And they've done exactly what, kind of the model should be there, in the fact that they've continued to reduce their leverage. And at the same time, they've been returning capital through the form of dividends, and the stock price has actually responded as a result of that, even with commodity prices not being that strong in the last, especially since June of this year. The stock continues to move higher. So it's one that we don't own right now. We own a few other names, but it's one that we have our eye on and have owned in the past.
Okay, good to know. Let's get to another caller then. John is on the line. He's in Calgary today with his question. Hi, John.
Good morning. Thanks for taking my call, Mr. Campbell. My question's on Cameco CCO. I've been working with this stock for the past five years, doing covered calls and selling and buying that stock. I was wondering what your synopsis would be for the next 5 years. And can you suggest another uranium stock, please?
Okay, thank you for that question, John. Cameco, of course, a lot of optimism around a nuclear build out for power, Bruce. It's up 326% over the 3-year period. Can you look down the line for Cameco?
Yeah, I mean, if you've been doing covered call writing, you've probably done really well because the stock prices have been going up. But there's also a fair bit of volatility to this stock for sure, just because it tends to ebb and flow with news. And so that, that presents a, fantastic opportunity for that covered call writing program that you've been doing. Longer term, I think this continues to go higher. And, there's probably, not too many people that are going to argue that we have a power challenge coming up in the future with all the new electronics that we have, plus with all the data centers. And one of the ways that that's going to be solved is nuclear power. I mean, we really went away from nuclear, and now we're really transitioning back. But those facilities take 10 years to build. Even the smaller ones are going to take a number of years to build. And Cameco is obviously the leader in the world in that, and so they continue to feed that. When we're in the uranium sector, that's typically where we have been, is in Cameco. If you're looking for another alternative, the one that we've looked at is NextGen. It's a lot of people kind of refer to as the kind of baby Cameco, and it's one that they continue to build out their their projects and think that it goes higher over time as they continue to build the company.
Okay, next gen is an opportunity for him there as well. Let's take a quick break. Back with your phone calls for Bruce in just a moment. Stay tuned. Welcome back. Thanks for joining us. We have Bruce Campbell with us today taking your questions. Let's go to the phone lines. Monica's on the line. She's in Burnaby, BC. Hi, Monica.
Yes, hi. Thank you for taking my call. I'm calling in regards to Curaleaf. So I'm just wondering, it's been going up a little bit lately, and I'm just wondering what Bruce's opinion is of it. Is it a good buy right now, or would you just look at something else? Thank you so much.
Thank you for the question. So Curaleaf is a cannabis company. It's been pretty volatile lately. Have a look at that chart. It really is bouncing around. It's at $3.71. What can you tell us about Curaleaf?
I mean, the entire sector is extremely volatile. I don't think I've ever seen a sector that trades more based on politics than the cannabis sector does. I mean, one of the challenges with the cannabis sector, especially in the US right now, is that they have this 280E, which is a tax that was put into effect years ago, and it doesn't allow them to expense any of their business activities. They can expense cost of goods sold, but they can't expense their other business activities. And so what it means is that they end up paying a tremendous amount of money in taxes to the IRS in the US. Curaleaf continues to grow and continues to expand in the U.S. and at some point in time that will change. We just don't know when. You know, you've seen this sort of wave of legalization move throughout the world, and even in the U.S., you have more than 50% of the states now are recreationally legal, and a higher number than that are medically legal. And Curaleaf operates in a number of those different states. If you can stomach the volatility of the politics, like yes, it's on, no, it's off, then at some point in time, there's going to be a day where the politics actually work in your favor. 280E is going to be removed, and the stock's going to be 2 or 3 times higher than where it is now, and that will happen overnight. The challenge is no one knows when that's going to happen. There's been many fits and starts, and so you have to be willing to deal with the political volatility, even though the company's been doing all of what I would consider to be the right things in their actual business.
Okay, and it could be very volatile considering it is the U.S. Okay, let's move on to Anthony in Toronto with a question. Hi, Anthony.
Hey, Bruce. With the biogas sector picking up some steam, I just wanted your opinion on Lane Renewables. They had 2 profitable quarters and no debt. They have some new technology coming out. I just wanted to get your opinion on that company.
Okay, thank you for the question. Lane Renewables is at 24 cents. They're quite a bit up. They had a bit of a spike sort of end of summer is what it looks like in August. Bruce, tell us about Lane and what you know about their movements and their growth.
Yeah, so that renewable natural gas area is going to be, I consider to be quite massive in the future, and I'll be talking about that when we do the top picks here in a minute. But Lane, I mean, if you look at that big spike up, that was when they actually turned profitable, and they have never been profitable in the past. It's been a really challenging sector for investors for sure, in that there's been lots of excitement about the sector, and then a lot of these projects take a lot longer to build, but getting to that EBITDA is fairly significant, and the fact that their balance sheet is now kind of right-sized from where it had been in the past really helps as well. We don't own that one right now, but we certainly have it on our radar screen and are watching it very closely.
Okay, let's get to another caller then from Owen Sound. Bill is there. Hi, Bill. What's your question today?
Hi, great show, Marella and Bruce. My question's about Bombardier, and I've noticed that they've had 2 Moody's upgrades this year, and their 2-year chart looks pretty compelling, and so wondering if you can comment on their sort of growth and future revenue streams and investability. Thanks.
Okay, thank you for the question. Bombardier up 107.5% over the last year, trading today at $216.88, Bruce.
Yeah, I mean, I don't think too many people would have guessed a year ago that Bombardier would have the performance that it has, but it's, they just continue to execute. And they really have two, elements, in my opinion, that are allowing for that. We have this K-shaped economy. We talked about the, consumer having challenges at the, throughout the call and throughout the program today. And I mean, this is the top end of that K, in that, their business jets, they continue to produce more, sell more, build newer, faster, higher cruising business jets that are in demand from their top corporate clients. At the same time, they're doing a multiple of different defense initiatives. One of the big ones is with Saab, where they have a radar and surveillance system that goes, one of Saab's equipment goes into one of their planes, and they're selling that as a combined effort. And I think that that's going to be something that you're going to continue to see in the future. They have done, some fantastic work as far as trying to get the balance sheet in order, and their numbers continue to accelerate. And it's one that we own and we like here.
Okay, Bruce, we're going to leave the block right here. We have to get to your new top picks. That's coming up after the break. Stay tuned for that. Join us tomorrow on Market Call. Ryan Bushell will be on the show, President Portfolio Manager at New Haven Asset Management. He'll take your questions on Canadian dividend stocks. And if you missed Market Call, check out our daily podcast. Find it on iHeartRadio and other platforms. You can also watch full episodes on our YouTube channel. Time now for new top picks from Bruce Campbell. We're going to begin with Anaergia, ANRG. On the TSX. They're an industrial company and they do organic waste, which we touched on earlier with another stock, Bruce. But what do you like about this company?
Yeah, I mean, we talked a little bit about the tailwinds when we talked about Greenlane, and I mean, that's exactly what we're seeing with Anaergia. And what they've done is they've gone out, they've recapitalized this company, and then they've turned it into a sales machine. So they continue to get bigger and more contracts from large companies. So think about somebody like Pepsi. They have these Frito-Lay facilities around the world. They have all this organic waste. They're taking that waste and turning it into renewable natural gas that they can use to power up that facility or heat that facility or use for a number of different ways. And that's just one example of clients that they have. They have, they've grown over the last year, their backlog, and it's now just under $300 million. Their revenue continues to go up, and they just had their first EBITDA positive quarter. That kind of got missed a little bit because there was a large institutional shareholder who was getting off the stock. It's not the most liquid stock, and as a result, they were pushing it down and leaning on it, even though those numbers turned EBITDA positive for the first quarter. And you saw what happened when Greenlane did that. So now there's a real opportunity to buy this stock as they continue to ramp up. The chairman of the company, he continues to buy, so there's massive insider ownership. And so I think that the runway here is multiple years for sure. And it's still just really hitting the radar, with being under that $500 million, it's still hitting the radar of many institutions here in Canada and the US.
Okay, let's get to your next pick, Tantalus Systems, which is a play on utilities. Grid is what they go by, GRID, on the TSX. So what do you like about Tantalus? And explain a little bit more about how they operate.
Yeah, so we all know about the kind of the power demands that are out there, but one thing that we also know about is the age of the transmission system, and so it's under stress because we continue to have more demand, and so they have different monitoring and control technologies that allow the utilities to come in and look at those different facilities and figure things out. So if a transformer blows, well, they got to send a crew out, they got to replace it, and those people have no power. They have, Tantalus has equipment that allows them to monitor, the utilities to monitor those transformers to see when they might be weakening, and they can come in and replace them ahead of time. The other thing that they have is this TrueSense gateway, which actually it's a smart meter that attaches to your house. And what that'll allow the power companies to do is monitor power, both coming in and out. So if you're producing your own power, but also your power usage. So it'll allow, the power companies to kind of dial back the power. If, everyone's charging their electric car at 6 p.m., well, maybe they can move that to 12 a.m. and, it helps things out. They're in trials right now with about 45 different utilities. A year ago, that was 15. We know how these trials work, as the utilities take a certain period of time to trial them. Once they do, then they move forward with contracts. They continue to grow their revenue and their EBITDA, and that's what we like.
Interesting. It's amazing how much monitoring can stop a problem from getting any bigger, which is, as you mentioned, what Tantalus does. Your third pick is Happy Belly Food, HBFG, on the TSX. So quick service restaurants. What led you to Happy Belly?
Well, they always say bet on the jockey, not on the horse, and that's exactly this case. So 4 years ago, this company in 2021 was 10 cents. They brought in a new management team. They gave them these performance warrants that were vested at $2. And they went out and they built this company. So they're consumer packaged goods and also quick service restaurants. What they've done is they've gone out and built, they've done this before with a bigger company. They've gone out and built and bought these brands, and then they just keep expanding. Again, it's just showing up on the radar of a lot of institutional portfolio managers. And interestingly enough, the incentive program that took it from 10 cents to $2, they've just put the new 5-year program in place where the management team gets incentivized for different levels between $3 and $10. And so that's their next target. If you talk to Sean Black, he has endless energy. He says he's just getting started. And I really believe that's the case. They have 100 locations that they'll have in place by the third quarter of next year. And I think they have another 250 behind that.
Okay. And are they across Canada or only certain provinces?
They're only in certain provinces, but they're expanding across Canada, and they also just went into the U.S. Recently with their Rosie's Burgers.
Okay, and how does it do in the U.S.? I imagine the competition's much stiffer.
It's stiffer for sure, but I mean, they have a niche burger, and they're just growing and just expanding out there. And if you look at what happens when these places come in and open up, there's a lineup around the corner to get in.
All right. So obviously the brand seems to be doing well. We will leave it there, Bruce Campbell. Thanks for joining us. Appreciate it.
Yeah, it was great. Having a good time today.
Thank you. And thank you for joining us today on Market Call. We'll see you back here again tomorrow.